Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. I thought I'll pop in here and do a quick video for you guys. I know it's been about almost 20 days since my absence here for the month of July. You know, I've been tweeting things out, and so I know I haven't done a video this entire month. You know, but I had some time today. I was wondering what I should be doing next couple hours before I go out and enjoy some outdoor activities tonight. I thought, you know what? Why don't I? I think it's, you know, it's a beautiful day today. It's, you know, it's been a while since I came to you guys in the month of July. Again, the whole month of July, I've been gone. And so I thought I'll pop in here, kind of check up on you guys and make sure you guys are navigating this market you know, without me. And so, and I just want to give you guys a couple things I see in the market. So, looks like Spider is up about 23%. Where's my crayon? Let's, there you go. So 23.23% positive on today's price action. Their Nasdaq is up 0.6%. Semiconductor is down, same 0.6 negative. Dow flat. Small caps did get hit today, almost down 1.6, almost 2%. They're negative. You know, you can see that transport is flat, and banks down 1%, energy down 1%, biotech pretty much flat there. We got the healthcare up about 0.6. We got the home builders down about 1%, utilities flat, retail's down about 1%. Emerging market is also flat. It's also one of those days, and this has been the story this entire year. A pretty mixed market here. Some sectors up, some sectors down, some sectors flat. Grayscale Bitcoin did make a move a little bit, 4%. I believe Grayscale Bitcoin was up 10% yesterday. But I looked at the chart yesterday, and the overall still benefit of the Dow goes to the sellers on Grayscale Bitcoin. Gold, silver, miners up a little bit, down a little bit there. Dollar is flat. Oil's up about 2%. Treasury bond is down. VIX is flat. Let's stick with the Spider here, 65-minute chart. So, pretty much I was gone, and this is gonna be, you know, I'll probably be gone all next week also, so I'll come back for you guys after this video. If I have a chance, I'll do another video. If not, let's assume I'll come back August 2nd, Monday, and we'll resume with our daily videos, right? So, where was I gone? So you can see right here, I was gone somewhere here, right? This somewhere here. So there's a pretty big plunge there while I was gone, but we're pretty much back where I left it, right here in this vicinity. So it's safe to say the market really hasn't done much. But let's talk about this year. First of all, we've been tracking this midterm moving average, right? The impressive resume guy. You cannot ignore this guy here. So something that I talked about before, it is much better to buy that dip versus trying to short this market. Why? See all these shenanigans. Looks like it's gonna plunge. It goes right back up, and so it's very, very difficult market if you're trying to make a living. Shorting this market, right? Just because you think market is up too much, it must see another 30% correction. Who knows if we're gonna get that kind of correction this year or not, right? And who knows when we're going to see that real meaningful correction. As of today, July 22nd, we have not had a correction this entire year. You know, officially, it's not really official, but you want to call it a correction. You want to see at least, in this market, we have to see at least 10% correction. 10% or more to really call it a correction. Everything else, you know, below 8% is just all market fluctuation. This pullback right here, right? How much was that? That's measly 3.5%. We really cannot call that a correction. It's just normal market fluctuation. We've seen this before. Do not ignore that the impressive resume, guys, here. And when this guy is going up, we want to give benefit of the doubt to the buyers. And another thing you guys remember, we track gaps here in these videos, right? Why do we track gaps? Because should there be any kind of shenanigan going forward, right? Bulls deploy these gaps. So should there be any kind of shenanigan, the gap will provide a cushion. It is not a coincidence. It is not a mistake. It is not a random occurrence that we found support right here when this gap got filled. And again, if you do a little fib there, that's a 50% retracement. We talked about this back in late June, coinciding with the midterm moving average, right? It is not a mistake. We found support that became the proverbial bottom, and it all happened after a big gap down. Everybody's freaking out, right? And then a gap got filled near that midterm moving average, and we soar, right? Another tankage here. You can see this gap. The gap has been deployed by the bulls when they're going up. Why? Should there be any kind of shenanigan going forward, which we did just a couple days ago on Monday, right? Should there be any kind of shenanigan, that gap will provide what? A cushion, right? So you see that gap got filled. That's that midterm moving average in that vicinity. Became the bottom. So very, very fast reversal to the upside here. And we talked about this level. This was when my oscillator was at extreme oversold. I tweet that out right on that midterm moving average. So you really think it found support right on that near the midterm moving average and the gap area. There's a gap area, midterm moving average. Do you think it was just a chance? It was a random occurrence? It was just all, happened by randomly? No. Why does this continue to happen in the market? Because we're in an uptrend. When you're in an uptrend, we want to continue to give benefit of the doubt to the buyers, and we want to respect the fact that this kind of price action is very likely, right? Remember what I told you guys before, that we may not see a meaningful correction the entire year. It's rare, but we've seen it happen back in 2017, known as the Trump rally. We have only seen 2 or 3 4 to 5% corrections the entire year 2017. Same thing happened in 1995. We saw like 3 to 4% corrections the entire year, right? So that could be something we're witnessing here for the year 2021. So, as a long-term investor, I just want to continue to kind of ride it to the upside. I'm not going to try to pick tops, or I'm not going to try to call the correction, or I'm not going to try to prepare for one. But it's will be much, much easier if you stick with the long-term outlook. And when you see these kind of volatility, you have a better way of navigating it without becoming panic-stricken. And you can see how the market come down dramatically. And the way this market has been moving this entire year, it's been making the traders and investors soft and spoiled. So as soon as we see a 2% down day, everybody freaks out, and the market gets right back up. And that's been the story this entire year. So let's kind of zoom in here and check out the short-term movement of things. So you can see a very, very fast move here. You can see on the candles, these are the inverted hammer candles, right? We got 2 of those right on that midterm moving average. We saw the follow through on Monday, right? So you can see that this is also a morning star reversal candlestick patterns. And then we saw a gap up, and we saw that strong follow through, right? And then what happened was we saw that, entire day, this was Tuesday or so, make a move. And then once we fill that gap, what happens when the gap gets filled? It's going to act as resistance. So you can see we did not pass that level entire day a couple days ago, right? So this is where it closed. And yesterday we gapped up, and you can see the gap is now. This is very crucial. What do we just talked about? When the gap is open, why the gaps are open? Bulls are going to deploy these gaps just so that should there be any kind of shenanigan going forward, that gap could act as a support, right? And it could be a short-term support, right? Right now, the oscillators at extreme overbought level. So if there gonna be any kind of a slide going into tomorrow and early next week, that 430 to 431 level is gonna provide that cushion. Right now, though, what's most important about this price action in the last couple of days is that both of my short-term moving averages, right? You can see my short-term moving averages coming down, but something happened right here. That's when the sentiment shifted, right, in the short term. Now we want to give benefit of the doubt to the buyers in the short term, mid-term, and the long term, right? Because these are my short-term moving averages. This is my mid-term moving average. This is my long-term moving average, right? That mid-term moving average has been very, very strong. Last like 4, 5, 6 months, never breached below 1. So obviously in the short term, market is going to fluctuate a little bit here and there. So, you know, that sentiment is going to change more dramatically, something like this. But you see how quickly bulls protected that mid-term moving average and switched that sentiment back to bullish and continued to grind higher. So should there be any kind of decline or slide going into tomorrow, early next week, my first short-term moving average currently residing at 433. 431.64, my second short-term moving average, right, and coinciding with this gap area. So let's say we see a decline next week or tomorrow. I say 433, 432 in this vicinity is all going to provide support. And the market needs that higher low anyway. So you can see sometimes, you know, what market is going to do is make a huge move, come down, retest that short term, and then ride it for a couple of weeks or so. You can see how many times it did that from here to here. Maybe that's a week and a half or so. You saw that bullish rally once the sentiment was shifted, right? Same thing happened right here, right? Same thing happened right here, right? Once that sentiment was shifted back to bullish, you can see how that price kept, you know what I'm saying? We see that pullback, but we use that short term, you know, or my second short term moving average and prop itself up until we see a steeper decline. And then there's a mid-term moving average that's going to kind of collect it or kind of provide that cushion again. And that's the level where we saw that gap area getting filled, right? That's like a double support. We got the gap, we got mid-term moving average. So in the short term, we got the gap, we got these short-term moving average. So let's check out that oscillator and see if we can expect or if we can extract any more information. So you can see we've actually hit that overbought level right here. You know, I tweeted this out earlier today, like second hour or so, or second or third hour of today's trading session. And we saw a slight pullback, but market kept moving higher. There's a couple of things can happen here. We could see a down move. And because we're in an overbought sentiment in the oscillator, sometimes the gap up could be there just to push it just one more time, right? There could be a gap up to all-time high and then maybe come down, fill it before going higher, something like that. So we want to continue to give benefit of the doubt to the buyer just because it's overbought. You can see right there. That does not mean the move is over, right? Once we saw that proverbial bottom, you can see that was overbought and this thing continued higher. Let's see here. So it hit overbought sentiment on June 22nd. It kept going high until July 13th. So you can see for 2 weeks and a half, market did make a move with you know, short-term pullbacks along the way. So we can expect something similar to that. And another good thing is that bulls did push it all the way up, and that's a good sign. And see how long it could kind of, you know, oscillate back and forth to the top of its band. And at some point, I believe we're going to get to the all-time high level and continue to march higher. And who knows how long? Maybe we could have another 2 weeks or so. So, well, there you have it, guys. You know, you guys have been great. Thank you for your, you know, follows and engagements through email and Twitter, stock tweets, and YouTube. You know, I'll continue to tweet things out at least once a day. But I thought I'll pop in, you know, just kind of give you guys my thought on this. And that's the thing about it is if you focus on the long term, man, you're not gonna freak out every time we see this kind of dramatic. And this is something that we've been talking about for how long now, right? We've been talking about this for, I don't know, this entire year. Do not, you know what I'm saying? Do not get emotional on these. It's nothing new. We've seen this before. And isn't it interesting? Right before, that bottoming action, it always gets, it's very dramatic. There's that gap down. There's that dramatic gap. There's another dramatic gap. There's that dramatic gap down. There's that dramatic gap down, right? So when everybody is like, oh my God, I think this is it, man. I think the party's over, man. This thing is we're gonna have a real meaningful correction. People have been saying this seriously since late last year. Don't be that person. Don't be that person, right? Learn to honor the uptrend, and trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We do not have any kind of clear signal. As I look at my long-term chart, I do not see any kind of clear signal that the market is. If anything, we're in this raising bull market. However, at the same time, this market has not been easy for many, especially if you're trying to build your portfolio at this stage. All of that should have been done late last year, or mid last year, right? Sometime maybe in the fall last year. And then there was some opportunities we saw, in election week, because we saw that 10% correction or so in August or September. And this year, there's certain sectors you can still accumulate. There's certain sectors that are still lagging. So I would focus on the sectors or stocks that are heavily down. A lot of those hyper growth stocks like Zoom or Spotify, they're still down quite a bit. Like Baidu, Alibaba, stuff like that. But I wouldn't chase on stocks that are already, like Microsoft is up too much, you don't want to chase that, or Facebook, right? Even S&P, the NASDAQ, semiconductor, Russell 2000 trends for the banks, they're up a lot. But there are other sectors, you know what I'm saying? They're still very much, engageable. Is that the word? There are certain sectors that's still good for accumulation for long-term investing. So I think if you can have to find value, even in this market, but do not chase some of these sectors or stocks that are already up too much, right? I think if you can do that, there's still ways to accumulate. There's still ways to make money in this market. But anybody who's looking at things way too short term, this market will burn you. This market will know how to decimate you. If you're trying to pick top, you're trying to, you're trying to time things in the short. It's been extremely, extremely difficult market for short-term traders. I know that much. Anyway, I think it's time for me to go out, enjoy the day. I'll probably show up. We'll resume with our daily videos in August 2nd, Monday, right? And we'll resume with our daily videos. But it's good to kind of come out here and check up on you guys, see how you guys are doing. But I'm sure a lot of you guys are doing well navigating this market. These kind of short-term shenanigans, it's given. Any day of the week is bound to happen. Our job is not to predict the shenanigan. Our job is to react and stick with the trend that's been working. Also, you have to understand that laws of physics do not apply in the market. Just because it's up too much does not mean it cannot continue to go higher. Unthinkables can happen in the market. Just think about what happened last year, right? Just because the way the S&P's been moving, though, it's been so lethargic and grindy, right? I actually think that that's a good thing, because you don't want this market to go up too much too fast, then it's going to be vulnerable. And NASDAQ actually did see nice corrections this year, like 10% or so. So NASDAQ kind of did that. Semiconductor correcting through time. Russell 2000 is also correcting through time. Bank's been coming down a little bit. Energy also. So there's a lot of healthy things been going on. Market is making sure to prop itself up, right? So let's continue to stick with our long-term outlook, and we'll go from there. You guys enjoy the rest of this summer. I'll come back for you on the next update.